Startuprad.io, your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Hello and welcome everybody. This is Joe from Startuprad.io, your startup podcast and YouTube blog from Germany. Today I do have a little bit unusual guest joining me from London. Hey, Kimmo, how you doing?
Very good. Great to be here.
Totally my pleasure. Everybody can tell from your name who's watching this on YouTube. Kimmo, how do you pronounce your family name? Soramäki?
Soramäki in Finnish, yeah.
Soramäki, yeah. Terribly sorry if I butchered your name. You are originally from Finland. You are currently in London, but we talk because you are a subject matter expert to us. And we will talk a little bit about the impacts of central bank digital currencies, especially where there are opportunities for fintechs out there. And I have been digging a little bit through your CV. We'll soon get to that. There are some very interesting positions. First, I would like to thank our sponsor today, Startuprad.io, the easiest and most efficient way to connect with investors and cooperation partners. And today's interview is also in cooperation with the Digital Euro Association, who actually hooked us up. Thanks to the guys there. Talking about digital euro, central banks and all that stuff. I have seen in your CV on LinkedIn, as always, we link it down here in the show notes, a lot of positions you usually don't see with startup founders. For example, I found Norges Bank, the central bank of Norway. For all the Americans, that's very up in Europe. Bank of England, European Central Bank. Very fascinating. The Federal Reserve Bank of New York, which is very important in the US Federal Reserve System because they implement the actual interest rate policy. And of course, the Bank of Finland. So tell us, what on earth did you do there? How did it lead to your startup? And why we're talking central bank digital currencies right now?
Yeah, maybe I was a little bit of an entrepreneur in those central banks. So I started at the Bank of Finland, and the first task I was given was to build a simulator when Finland was joining the European Union, and the Finnish banks wanted to know what will happen to their liquidity and payments when they become part of the euro area and don't just circulate markka in Finland. And I think I maybe overdid it a little bit. Probably they were thinking of sort of an Excel spreadsheet, but I built a software to do the simulations.
Too bad, because the very first thing, Kimmo, when you said about I built a simulator, the very first thing I had in mind was a flight simulator. I was going, he was building a flight simulator in the central bank. No, dang it.
Yeah, it was in a way similar. I built a software to do simulations of payment systems and how banks operate in those and what kind of mechanisms those have. And I was invited to the New York Fed and the Bank of Japan to do simulations about their systems after a couple of publications. So that, I think, took me on this sort of a simulation path. It was always something that I was interested in. From there, I went to the European Central Bank. I was during the Euro change over there. Mostly overseeing payment systems again. At that point of time, I also doing e-money, and I always told my friends, and I'm working in payments, and it was very unsexy. So why do you do such a boring topic? And now with these fintechs and crypto, it's become one of the most exciting places to be. But I was there when it was very boring in other people's minds. From there, I went to the New York Fed's research department. And there I really encountered the literature on network science and network theory. And I said, hey, this is a great way to understand how money moves within the economy, within the banking system. And we did some research on that. And that caught the eye of the national laboratories in the US. And we started to build software again together now on simulating attacks on critical infrastructures. So this was at the back of the 9/11 terrorist attacks. And then my plan was
I would assume your focus would have been more like attacks on central payment processors, like
Exactly. Yeah.
in the US or something like this.
After the 9/11 terrorist attacks, I think there was a lot of worries that maybe the next attack will be on different critical infrastructures. They could be banking systems, payment systems, road networks, bridges. So we were building models and simulation models on how these attacks on these payment systems would play out, and how would we be able to protect the payment systems from attacks. Now it's of course very relevant with all these cyber attacks against the infrastructures, and with war in Ukraine going on as well. So that sort of took the other side. But when first it was about making the systems better. This was about how can we disrupt them, or how can they be disrupted by others, and seeing sort of resilience about the infrastructures. And my plan was to they planned to put that software into open source, but they never got around it. So then I decided that I'm just gonna start building from scratch something similar. And that was in a way the birth of the FNA software that we have today.
And now you have to solve a big riddle for me. What does FNA mean? I cannot find it on your website.
Yes, it's so funny. We work with a lot of other like 3-letter acronym organizations. So most of our clients have also 3 or 4-letter acronyms, like ECB or IMF. But FNA means is financial network analytics. So that was the root of what we went out to do, is to build a platform for understanding these complex financial networks, map the financial networks, and then do simulations how to make those systems more efficient, or to do stress testing on them.
So first, a little smile here, because when you said, a lot of our clients have been using 3-letter acronyms, I was wondering, did he seriously consider to name his company TLA, 3-letter acronym?
That's a generic company.
Set that aside, my understanding is right now you are doing simulations, meaning not the very small ones, but the very big ones. You generate maps of how money is flowing. And that's why we are talking today here, because we will be talking a little bit about the potential impact of central bank digital currencies. You're always way ahead of the curve here with us. When do you believe seriously that the European Central Bank and or the Federal Reserve will have real central bank digital currencies, CBDCs? I think it's 4 to 5 years down the road.
Yeah,
really applicable, usable.
Probably sounds right. Maybe just go back, because when people speak about CBDCs, there are so many different varieties and ideas what a CBDC is. So for me, central bank digital currency is there can be 2 versions of it. There can be something that is used by normal people, like they do cash today, which is something that is issued by the central bank. But there can also be wholesale central bank digital currencies, which is let's say the banks would exchange with each other. And I think the more interesting part is the what is called the retail CBDC, so which is a cash-like payment instrument that is in a digital form. So instead of giving someone banknotes, I would be able to tap my phone or transfer you some central bank tokens that central bank issued tokens that are digital. And I think they'll come. I think so. When I was in the European Central Bank and the Bank of Finland, maybe 20 years ago, the thinking was always that central banks won't issue digital currency because there is this risk that if the system gets compromised, then we lose all money. Like we can't trust the money, and it was too important of a topic to be lost. Because without money, we are quite handicapped in all economic activity. Every economic activity needs a payment. But now with the rise of the cryptos and sort of cryptographic techniques and other techniques, I think the technology has gotten much better. They've been out there for a while already. People have gotten more comfortable with the idea. So I think now, in a way, is the the environment is ripe for central bank digital currencies, and the fact is that the cash is declining as a means of means of payment, and I think central banks need to keep at pace with that technology and provide new means of payments into this new digital space that is we're spending more time, we're spending more money on the internet and online, doing more non-in-person payments. So there needs to be a payment instrument provided by the central banks for that.
Before we get into that, you're not only a consultant to very important central banks, you're not only a startup founder, but you have been working in the past, for example, during the Lehman Brothers collapse, in the aftermath, doing some interesting work there. That's why we are talking about here. Before we get into the real discussion, can you share a little bit about what you did in the aftermath of Lehman?
Yeah, so this was a continuation of the in a way the work that we started to do to simulate attacks on critical infrastructures and the banking system. And then when the financial crisis came, like we realized that, well, actually we don't need anyone to attack the system. It can dissolve and destroy itself. But a lot of questions that came out from that were related to the interconnected nature of the financial system. Everyone was asking, "Hey, who is connected to Lehman? Who is connected to the people who is connected to Lehman, and who is connected to the banks that have lent to Lehman, and so forth?" So everyone understood that the financial system is a large network of interdependencies, and then some of the work, and we had been developing these network maps of the financial system in the US. Everyone started to find those much more interesting than before. Before, let's say, classical economists were saying that the links don't matter. It's a market. We are facing the market. They were sort of like purist and classical economists. And after the financial crisis, there was really this realization that it's a network. All these connections, exposures matter, and how risks cascade in these networks. And we need to understand much more granular level these interdependencies within financial institutions and corporates and others. So some of the work that I had done, research, was used in congressional hearings, for example, to argue that the regulators need to get more information about what is going on in the financial system. So pre-financial crisis, there was very little information that was provided, and that information came late about the exposures and about risks. So there was this drive to the regulators need to get all this information, and that's been happening now over the last sort of 10, 15 years. And today it's called SupTech, or supervisory technology. So it's a spin-off from regtech, which is regulatory technology, which is a spin-off of Fintech, which is financial technology. And I think Fintech probably most people know, but there are these subcategories. So it's technology used by central banks and supervisors to make a better sense of what is going on in the financial system, and to identify systemic risks. And that's sort of a key pillar of what the FNA today does, is to provide technology for these types of network analysis and understanding and simulating financial systems.
I see. So we headlined this today, Fintech Opportunities in Central Bank Digital Currencies. Let us talk a little bit about the potential impact of CBDCs. First, I do believe at one point down the road, you would be able to transfer almost instantaneously money from every place in the world to every other place, including from one cell phone in Japan to another cell phone in Brazil, like that. That should be possible in the future. That is one of the main reasons why you have central bank digital currencies, but that will also change quite a lot, because there are a lot of different intermediaries you have there. For example, you have your Android phone, you have your Google Pay, then you have a MasterCard behind it, then there's the MasterCard network, then it goes into your bank account, there's the central bank, it works with another central bank, it works with a commercial bank, which then in turn sends it somehow to your cell phone. And a lot of this will be cut out. So can you tell us a little bit, can you give us a broad overview of what
I'm not sure that a lot of it will be cut out because all those intermediaries emerged for a reason.
Yeah, better to say they could be cut out,
Yes,
right?
Yes. Yeah.
Can you give us a little bit of an overview?
Yeah. So I think with this idea with this decentralized finance and cryptos, that a lot of the intermediaries can be cut out. But I think the reality is, as things get bigger, all these intermediaries that we see today will emerge because they serve a key role. The other point of it, if we don't have intermediaries, for that example, with like sending money from your phone to someone in Japan, what kind of money are you sending there? Are you sending euros? So that means that the Japanese counterparty maybe can hold your euros in Japan. And I think that's one of the key drivers for this conversation around central bank digital currencies is that whose money is it going to be that we're going to be using globally? Is it going to be the euros, or currently it's the dollar banknotes that we talk about dollarization, and you can go to many countries and pay with dollars. But in the future, when we are in a digital environment, whose currency are we going to use for these digital transactions? Is it going to be dollars, the digital dollars, or is it going to be the digital euros?
Yeah. We may go back a little bit into history here because after Bretton Woods, after the Second World War, de facto, the leading currency of the Western world became the US dollar. And for quite some time, even today, you cannot just exchange one currency for another, just say a euro into some Brazilian real. For most of them, you first have to trade them in US dollar and then into this currency because everything is measured against the US dollar. That's why you're referring to the US dollar there. And maybe there's even an opportunity to go into something even more central, like nailing it to the special drawing rights. That's the currency of the International Monetary Fund. So there is a lot of uncertainty here, and that's why we are talking. And that was just a little detour. People who are listening to me know that I love to do detours into the history and why the US dollar is there so important, and why you still need to have in mind the exchange rate euro US dollar. Sorry, go ahead.
No, so, but I think that's one of the key drivers is that there's in a way people are also, there's quite a lot of in the news around the Chinese digital Chinese currency. Does it become a world currency? So maybe that's a threat, like to dollar or the West. But I think like a lot of the thinking around this digital currency is because in the digital world everything can spread so much quicker. And that's why we saw this crypto spread so quickly around the world, because it's much faster to move digital tokens around than it is to move cash notes around. So when we have central bank digital currencies, I think there's a little bit of a race between the different countries to at least not be later than others to launch their own digital currency, because otherwise it might be that if the US dollar launches a digital currency and then it proves very popular and everyone in Europe starts to using it instead of the euros for transactions in the sort of online and in the digital world, making payments to each other. So the borders are not so clear within digital currencies as they are with the national cash sort of banknote-based currencies.
I see. And we're recording this end of June 2022, and we've just seen in the last days the collapse of the Terra US dollar stablecoin. So it currently looks like you need a reliable, a trusted person, institution, organization group that issues stablecoins. I do believe the collapse of the Terra USD maybe the nail in the coffin of the stable coins out there, at least the privately issued, at least the ones issued from
Or they should be just regulated
upstart
like any
fintechs.
other, regulated like any other sort of financial institution that is issuing securities or holding your balances of money, which has not been the case so far. But I'm sure it will be in the future. They'll be getting in the normal regulatory fold.
Mm-hmm. Mm-hmm. Yep, possible. So basically, you've been saying central banks will have digital currencies. It's faster to move around. What in turn does this mean? Because when you're doing something via PayPal, especially within PayPal, you can have money sent around within hours, where actually it takes a lot, because going back, it's the idea that basically two banks, they have to settle the cash with each other, and instead of, at the time, they still had to transfer cash. Instead of sending 50 million US dollars there and getting back 51 million US dollars, the bank will only send 1 million US dollar, and then you just do the transfers internally. So only the ones the delta you need to transfer. That is something you go back from, because you can only make a cut at the end of the day. And so you get more real time, more faster. What will be other implications there? Because I do believe also to transfer between central banks, between banks and central banks, it will all be much faster.
Yes, I think in the in the sort of modern economies, we already have very well functioning payment systems that are very fast, and most use cases that we can think of, you can already be done very easily, and it doesn't cost a lot of money. So I don't think the central bank digital currencies are so much of a competition for existing use cases. I think there will be new use cases, maybe smarter money, maybe related to some government subsidies and other types of new use cases that we can't think of yet, that we can do with the central bank digital currency. And I think it will be used for these new use cases more than maybe replacing the existing ones. We'll continue to use our cards and debit cards and credit cards for daily transactions. But I think there will be more niche roles for the central bank digital currencies where they can provide additional benefits. For example, limits on what you can spend those monies in. So, if, for example, these COVID checks that like a lot of countries had giving money to people during COVID to cope with things, could have been said that, hey, you can use them for grocery shopping, or you can use them for whatever things that the government thinks that people should be spending the money because they want to promote that area of the economy. Or other types of sort of smarter sort of foreign aid, for example, is more tractable, instead of like giving countries a lot of cash or money, and a lot of it ends up in corruption. Maybe with central bank digital currencies, we can limit the recipients of those monies to those entities we want the money to be spent, to be able to track it better. So I think there's quite a number of new use cases that will be interesting for the central bank digital currencies, and we shouldn't think that it's going to compete with the day-to-day things that we already find very comfortable and are very cheap.
I actually just felt the moment when you said you can limit on what, when, and how you spend central bank digital currency. I felt the moment when some libertarians who are embracing digital currency, because it frees you from the state oversight. That was the moment they were very close to a stroke, when they realized, oh, you can abuse crypto in that way, making the euro only spendable on necessary stuff. For example, even social payments, limit them on what you can do with them. Maybe forbid online gambling.
Yeah.
And I already found a pretty good use case for this, for a startup that actually can help you circumvent those limitations. Sorry, go ahead.
I think you can always circumvent things, but in most cases, like you 80-90% of the people would of the usage would be cut by these types of. So I think there are ways always to circumvent, but I think it still can provide benefits for those use cases. if you think they have benefits, depending on your stance on what the government should be doing.
One more question, because you may have seen this here in the background. There is the German Schwundgeld. It's actually a little experiment that was done after the Second World War, and basically they had money, like physical money, like notes, and they had a stamp on it used before. And is this also something you could do with central bank currency? Because there are several things you can do to jumpstart an economy. One of them is just giving it more money, and the other one is to increase the circulation of it and say, guys, you need to spend this within a year, otherwise, poof.
Yes, of course, we have a couple of central bank digital currencies out there, like in the smaller sort of like economies, but we don't have one yet here. So we can only imagine what sort of like it could have. But I think it's also already providing a lot of thinking for innovation, like what kind of uses it or limits or what kind of features it could have. And that's one of the of course, like is this use by data. So what we've done is we've built a simulator for the central bank digital currencies, where you can test all sorts of different features and configurations and limits on usage. Can I use it for person-to-person payments? Once a business receives it, can it pay other businesses? Can it pay its employees every day? Give them a little bit central bank digital currency instead of a monthly payment per bank transfer. What kind of uses will this central bank digital currency have? Are there going to be caps? I can only hold 3,000 because maybe the feature of the central bank digital currency is that it's actually on my wallet. So if I lose my wallet, I lose the money. Or how does it work? Do I need to actually bring those tokens into storage at the bank? So I think there's so many moving parameters around the design and features of the central bank digital currency, and it's very hard to understand how all these different parameters interact with each other. So that's why we built this like a simulator to where you can look and simulate and change assumptions and see how things fold with the different configurations of central bank digital currency in competition with the existing payment instruments, and are offering that to central banks and banks who want to understand how the new world might look like.
And how could our audience, our fintechs, entrepreneurs, investors out there who are listening to this right now, how could they get access to it?
So get in touch with myself, for example. I think maybe there's my email somewhere, Kimmo at FNA.fi.
Down here in the show notes, there will be your LinkedIn profile linked as always, and people can directly reach out to you.
Yeah.
Great. So we already know a lot that is possible with CBDCs. And guys, now you can think about all the opportunities. Yes, of course, the most obvious way is to circumvent the limitations you can put into your central bank digital currency. But I totally do believe you can do more with that. Kimmo, it was just a pleasure having you here. Thank you very much. And I'm totally sure we'll have you back pretty soon, like in a year or a year and a half, and to talk about more recent developments.
Yeah, hopefully we have more experience already from existing CBDCs by then.
That will be totally fine. Thank you very much. It was a pleasure.
Thank you. Excellent. Great to be here.
That's all, folks. Find more news, streams, events, and interviews at www.Startuprad.io. Remember, sharing is caring.